Rise Nation, rise up. Steve DeLaviaga, our podcast, our most requested topic, what's happened with the rates, where is it going? So I just decided to get the two smartest, best humans I know in rates, and I also dressed for them. To my left, we have Dustin Dehart, D. To my right, we have Greg Gale, G. So I just went my DG. You guys that are into cool fashion, you're going to think that's Dolce & Gabbana. It's actually Dustin and Greg, just so we're all clear, that's what we got here. Gentlemen, good to see everybody. How we doing?
Thanks, man. Doing good.
This is my crew. So now, two of the best guys I have in mortgage, biggest loan officer in the United States for Keller Home Loans, taught in the Corps for 10 plus years, coach LOs all over the United States, one of the top no loan officers. We've had it go down now 4 weeks out of the last 5, the rate drop. And what happened to apps?
Up like 35% right now. Well, the media's in your favor this time.
Yeah, that's
Normally
instead of it being the other way, where
Normally
everybody's going,
it's not.
oh my gosh, it keeps going up, and now it's going the other way. So this is important. By the way, what are they now? 7-1, 7? That's what Greg just said. He said he's got so now we know we have an election. There's no chance you can go into an election with a stagnant
Neither
real
side.
estate market.
Right.
You've had, so let's just not even forget refis for a second. We've had 7 million people pass in the last 2 years. 50 million people have gotten new jobs, switched jobs. 4 million people got a totally new job. 1.8 million babies, 3 million marriages, 1.4 million divorces. All these are reasons people move, and this pent-up inventory is sitting here. Give me a story you guys have within your database that is kind of illuminating this. The guy we were just talking about, tell this story. This is perfect.
Wow.
Credit card debt here,
Yeah.
school debt here, equity, but I can't get to it.
Yeah. I mean, we just had a gal, and she actually left her property, rented it out, moved to Texas. That didn't work out. Moved back, and she couldn't get back into the place. But she had all this debt, like 40 grand. She needed an extra 10, so I got her 50 grand. But what happened was I asked, well, what's your credit cards at? She's like, 23%. I'm like, that's the lowest? She's like, yeah, the highest is 30%.
So she had 2 credit cards, 23 and 30, because as rates grown, she's probably barely making interest.
Barely. I mean, it's like we talked about. It's like a neg am loan where
Yeah.
you're literally making just enough of a payment that it's stacking up the principal. So she's never getting ahead. And so she's stuck. And that's where so many people are. And I'm sure, Dustin, in your database too, where they've got all this equity. They've been running their credit cards. And that's at an all-time high right now.
Correct. And this is where that pent-up thing comes. She's like, I don't care anymore.
Right.
You were able to get 11% second because that's what it took to get the money out for her.
Right.
And she's like, I don't care. I got to get this done. I got to get these out of my books.
Yeah. Well, you can think about it. It's hard to move someone from that 3-4% interest rate, right?
Correct.
They just don't want to move. And now they're having all this debt that we can then put in like, hey, let's just throw a second on here. Now their blended rate is 7-8-ish%, right?
Yeah.
Now they're more likely to make a move.
Well said. What about you? What do you got? Let's talk about this. You're the number 1 loan officer in the country for Keller Home Loans. And December, you're going to have your biggest month by 2? But some of that's holiday work, right? We were talking about this, and seasonal. UAW going back to work. What's your January pipeline? I want to, if there's something to draw on, get me something to draw on with a pen or paper. This illustration was so perfect, right? So let's start here. We got inventory. So you got like houses, right? Let's say there are 3 houses. And we're in Arizona, but it's pretty similar in most of our 38 markets. 3 houses. No, they're not flying off the market today. This time of year, you might have 4 or 5 buyers. Inventory's kind of covering it. So it's not crazy. But on this side, so it's 4 or 5 buyers, 3 houses. It's okay. Things aren't flying fast. Prices are. If you want to sell it, you got to drop the thing a little bit, get that guy excited. Mm-hmm. Now you have on this side, that's okay. I'm good, thank you. On this side, you have people like, oh, I'm not going to get in there until after the holidays. I'm going to wait till January, get through Christmas. Not going to do it. So there's this group of buyers over here, say 5, 7, 8, 10 people. Then you go on this side. Well, I got to wait till February when I get my company bonus, which comes in. I get the bonus. Now I'm ready. Mm-hmm. Then you go down here to March. And this is Brian Danny, my top agent out of San Diego. He's brilliant. Then you go down to March and you got, okay, I'm going to do my taxes first. Mm-hmm. Then I'm going to get in. Cluster of buyers, cluster of buyers, cluster of buyers. When all of them get in, what happens to these house prices now? And then the rates go to 6-1. Mm-hmm. Like all these guys getting in, or I can go now and have less competition, buy the house, and in 2 months refi it anyway with Greg and Dustin. Right. And now I'm not worried about it. So I'm worried about, I think next year we're going to finish at 3.9 to 4 million transactions real estate this year. Mm-hmm. I think next year you're going to throw with 5.5, 6. Yeah. If those rates get to 6-1, forget it.
Right. Well, and you look, there's
Give me your thoughts
like you said, there's going to be this frenzy, right? And they say you can't time the market, but literally right now you could time the market. Like Dustin said, there's concessions. You can do the 2-1 buy down. You're going to get a deal on the house, but that all goes away once the rates come down. And once all those little pockets that you're talking about start influxing into the market as well, I start losing all of that. So like you said, either get into the frenzy of, hey, we're just going to refinance later and I'll just stand in line for Dustin and Greg to refinance my house. I'm fine waiting in line for that one. Yeah. I don't want to wait in line for a house. Because what happened 3 years ago? I'm waiving inspections. I'm in a house that I settled for that I'm not really happy about. Correct. What was that stat that came out that said the number of people that weren't happy with the house purchase they made?
It was like over 25%. And they're talking about a $500,000 purchase.
Ridiculous. So which camp do you want to be in? Hey, let's go find where, like you said, there's opportunity. I can look at the house. I can wait a day to make an offer or two. I can get some concessions. I can haggle. I can use my inspection period. I can leverage that for even more concessions. I can do that right now. It might be January where you lose that option.
Yeah. Well, I think, you know what's funny? We always say is consumers only see kind of what's right in front of their face. Yeah. Sometimes like our realtor network, right? So guys, this is coming. Tell this story. Because I just gave you the buyer analogy. Now let me give you the rate analogy. Okay? Same thing. Rates are at 7%, 6.9. There's a house and there's 2 or 3 buyers that are, okay, I got to go at that number, I'll do it. Then you go over here. Well, I'm going to refi when those things get in the 6s. I'm going to refi. Give me a 6.7, 6.6. And there's a cluster of buyers over there. And then you go over here. Well, when this thing gets to 6, below 6.5, we're going to sell our house, get our equity out, pay our bills, and got it. Then you got these ones that may never get there. They're going to say, oh, I'm going to go wait till 5, 5, 5, 9. But there's still 3 clusters. Add the clusters of buyers with rates, clusters of buyers with timing. Right. You're going to have a frenzy. The NBA came out today. You sent it to me. What did it say? 6?
Which could be by the end of next year or the year after, right?
100%. And by the way, we'll be in low sixes July-ish going forward. You're going to be in that 6.361.
Yep.
And you might get there sooner. So now, here's what we're saying. This is coming, and these are expert people. That's why we have them here. What are you going to do to stay in proximity with this data bank of people that you've worked so hard? You've gotten leads from Realtor.com and Ojo and your database and open houses and farming. Now, are you talking to them? Grab guys like this, talk to them about this is coming. Let them make educated decisions, because here's what's going to happen. That's what's going to happen. Yeah. Mm-hmm. Well, you know how it is. They get the right postcard in the mailbox that day. Oh, I'll call Gina and see what she's doing, because they haven't heard from you with anything of value. Sit down and explain the illustration. Talk about this. Share podcasts like this. What are you guys doing? Because you've got all these folks, as you've still been doing business this whole time. What are you doing with your folks to get them ready for what's coming? How are you communicating?
Well,
give me your database update.
I mean, you brought it up earlier this year. That's really the nurture game, because a lot of people can't pull the trigger right now. It's not like a 90-day sales cycle. It's 6 months to 18 months, and
correct,
and very rate sensitive of a market. So it's like you said about education. What I did was, maybe earlier this year, was create a better buyer presentation. So when I'm consulting with the client, just like Dustin, we're like, you got to educate them. It's not just, hey, here's your debt ratio, here's what you can afford. Oh, you're not going to do anything? Okay, and then drip on them with your CRM. Like, it needed to go up another level. Hey, come into my office. I'm going to share with you some of the stats, just like the one you texted us earlier. Hey, this is where we see rates are headed. Here's what happens during a recession. You know, giving them the real data, because what they see more often than when they talk to us is the media. If the media is more
they give them one national number, which has nothing to do with the locality we're in right. Arizona and Nevada.
You know, like in certain areas, they'll say, you know, that we see a crash or equity came down. Yet equity was from 20% to 17%. You still had 17% growth of the house, yet that's a decrease. So they flash that up there and say, there's a crash coming. And your consumer, my consumer, sees that. So we have to be the source that they're going to for like the real information. So shooting videos, doing webinars, having the PowerPoint, having the presentation, professional, where you have real stats, real numbers that they understand. And then, like you said, constantly in front of them. Invite them to your pumpkin pie giveaway, invite them to your holiday parties, invite them to the movie theater. Like, it's just a high level nurture game. Because all those seeds you're planting, you've got to water them, because at some point they will sprout. It's just taking longer in this market.
One of the things I think makes these guys so much better than the people they compete with is you guys spend time in the data. Mm-hmm. The data for you is the dollar. And you can sit there and educate someone on the data right now in Clark County, in Maricopa County, what it actually looks like, right? So I always ask when they go, well, rates are going down. Is that your truth or the truth? Because your truth is one thing, but it's usually not right. The truth is the truth. And we tend to go to experts to go, what does it look like? And I can tell you from the real estate side, I've never seen so much pent up money wanting to get out and then to pay off, because debt creates strain. Mm-hmm. That gal you were talking about, the gal you and I mentioned earlier, they're just like, I want to get out of this. I'm sick of seeing a $30,000 credit card bill climb as I'm paying the minimum, because their rate's 23, 25, 30%. And so as you sit here today, educating, nurture, stay in front of people, done deal. Now, when we start kind of forecasting out a little bit for you guys, if you got 100 people that want to come refi, you can't refi 100 people in a month or a week, can you? Right. How does it work? What's the pipeline look like? So how are you, because right now everybody's had to get skinny, right? We all had to get skinnier. How do you attract talent in this market? What are you saying that, because I mean, you've got a big business and you've been lucky to stay successful through this. How are you attracting talent? Where are you getting it? What's it look like? Well, I'll tell you this: I have a soft spot, as you know, for how you did it because you left. Whenever you change companies, it's hard. Dustin changes companies, is going through a complete new everything, new operating system, do this, do that, and what you've done to be able to build back up, become the number one entity for the largest real estate company in the world, their lending partner with Gary, and how you've done it, it's been an absolute stud to watch because people don't realize you grinded. Hey, it wasn't gumdrops and rainbows, brother. It was you're calling me like, bro, I'm afraid I'm gonna have to. What's the food stamp thing look like? This whole shit. This thing is when does this thing stop? So what about you? How do you find you're a world class coach? You coach nationally.
Yeah.
You coach with Rise with us. How do you look for your talent and how do you acquire it?
Well, I think a couple of things. First, we're all going to just get super efficient with our systems. We've already started cross-training people with company-wide so they can pick up and help because you can't just snap your fingers, bring somebody on. Even if they were trained in the industry and let go as everyone downsized, there's talent out there. But if I brought somebody on, they still got to learn those systems, like even just how to clock in and how to run the new LOS or whatever they're using.
Right.
It's going to take time.
There's no plug play ready to go that week.
No.
Yeah.
So cross-training your people. The other thing, if I rewind, is tracking. Because if you're not tracking the leads coming in, the app's going up, the appraisal's being ordered, then you're going to look up and go, oh my gosh, I should have started looking weeks ago, months ago, right? So as you track that, see that escalation going, then you got to reach out to your referral partners. Reach out to the people that you actually had to let go, the good ones, right? That first wave of cuts was, yeah, they were probably not the A players anyways, maybe not even C's, right?
You got to the bone a little bit.
You got to the bone, and it was like, ooh, call those people. Make sure you get them back and stay in relationship with them now.
Yeah.
Right? While you're not hiring. Look for those people too.
I think this is ROR in real estate is the single greatest thing you can learn in this space, return on relationship. How you leave something says so much more than how you enter. So when people leave, do you stay in relationship? Wish them luck. Give them a great reference.
Yeah.
Say you need anything, call me. Helping people when there's no obligation or immediate win for you allows you to ask a question later like, would you like to join my team again? I'd love to have you back. You've earned the right to ask that. All right. How many years have you been in the business?
18.
How many years have you been in the business? Okay, so 35 years experience. By the way, these knuckleheads, how they got here was not from some mortgage school. They didn't go to like mortgage. So let's get this story. Now, as you can see from Greg's slightly disciplined. He's like the Bruce Lee of, lending in terms of Kung Fu, black belt. So give your story how you got there. Because it wasn't like, I went and majored in finance and got into mortgage. It wasn't how that worked.
No, it was quite the opposite. No, so I actually was running a martial arts school, the Bruce Lee reference.
That's what I
ran a
said,
martial arts school. I graduated ASU as exercise science physiology. And then my first job was as a personal trainer. And then my very first client was a mortgage broker who indirectly got me in because my girlfriend at the time, who's now my wife of 20 years, wanted to get into real estate. And the mortgage broker said, she doesn't want to get into real estate, she should do mortgages. So she interviewed her, hired her on, and then 5 years later, I was leaving the gym. I was like, man, I got to get out of here. I'm capped with how many
Can't
people I
make
can
any
train.
money, working 20-hour days. And,
You just got a ceiling to how much you can make.
Yeah.
So it was a fun environment,
Yeah.
but you had a ceiling. And so everyone was like, did you need to get into sales? And then my wife said, hey, there's a top producer here at the brokerage that you can come and learn from and be his apprentice. And so I was an assistant to him this is 05 that I got in, right?
Great.
So 05 to 08, perfect timing.
Yeah.
And then I was his assistant the whole time. We actually ended up a separate brokerage. So my wife was running this one with the owner that was my client previously as a trainer. And then I was running this one with JB. And then, as you know the story, in 2008, he passed away in an ATV accident.
Yeah,
so we
terrible.
shut it all down. This is when everything was going on. And that's actually when I found the core, because I no longer had a mentor in the business. So I found the core and joined coaching with them. And I was a student for 3-4 years with them before they asked me to be a coach. And that's how it all ramped up from there.
So let's take a couple examples here. Intangibles are more important than tangibles. Forget intelligence; it's nice but not required. Forget what your last name is, where you went to school, all that. Intangibles. What did the martial arts / that initial world you lived in coming into mortgage? What 1 or 2 intangibles made sure you were successful in mortgage as you are now?
The discipline. It did teach me discipline. It was repetition. Even though we learn a ton of moves, my teacher was like, there's like a dozen that you need to know. And they all just get mishmashed around to make all these different movements. But there's like 10 or 12 things. You get really good at those things, repeat them thousands of times, and you'll be lethal.
This is what's funny about mortgage, just like real estate. Mortgage is not difficult, but it's really hard. You got to do the same thing every day consistently well. That's hard. Right? That doesn't. You know what to do.
Embracing the mundane.
Exactly. We always say the money is in the mundane and the fortune's in the follow-up in this space. D, talk about where you came from.
Well, I graduated from UNLV. We know what happened there recently.
Yeah, yes.
Crazy world, but political science degree, and I was like, what am I going to do with that?
Wait a second. Your parents let you major in political science?
I didn't want to go to law school, so I kind of stumbled around bartending and opened a restaurant and this and that.
How'd that work out for you?
It worked out great. And then I kind of stumbled into the mortgage industry when I was basically starting to take the LSAT and make the move, and I started in this little ancillary branch. And the people that owned it seemed a little less than on the edge of doing.
Gee, are you sure? I'm just new here, but that seems a little bit. Is that legal? Subprime refi loans in Vegas, guys. Just so. You guys are all right in the prime of it, yeah. Here's what's funny, right? You heard it. He was the first one there and the last one to leave. And as soon as it got tough, he understood, hey, I got to knuckle down now. I got to go real estate partners. I got to go. So it's funny because real estate, all of us here, we all failed our way forward into something. No one ever woke up at 18 and told your folks, I'm going to be a loan officer. I'm going to be a salesperson entitled. No one ever said it. All right. Now let's imagine this as we close. You're talking to your best friend, your wife's sister, and they're like, what do I do? Next 6 months, what should I do? If you're me, what would you do? And give the scenario you want. So you can be like, hey, I have a home and $500,000. We're having our third child. I might like to move up. Should I wait? What would be your advice? This is an important point you make, D, because builders spend hundreds of millions of dollars on forecast data. Now, that's what they know when they go, oop, we're only selling 3 a month. Now we're in lottery, everything going up 25 grand a month. Now they're like, sell everything.
Get it gone.
Like just sell everything. Yep. So, and that's going to change in 3 months. They know. What would be your consult there?
Well, kind of the same thing like Dustin. You know, it's really about, they all need to sit down and just see what is their game plan. Like, what do they have? What can they even do? What's possible? And what's their long-term retirement goal look like? Are we looking to pick up investment properties right now? Because again, if I can get deals and I get the seller to do stuff for me, then now might be the time to make a move. I mean, my personal example is I've got like $1 million in equity in my house. I was under contract 5 months ago, had a 6% interest rate on an arm. We backed out of the deal for inspection. After that,
he had to get one of those in. He had to get one of those in.
I'll call you. I'm good. I'm good with that. But from there, I stopped because rates flew up to 7-8%, even on the arms. I was like, oh my God, I'm out, and I'm going up like 3-4 million. I'm like, well, dude, I'm not doing that.
Yeah.
And so, but now I'm seeing them come down. I'm like, okay, now's the time to go, because I know that if I wait another 2 months, those properties are just going to be gone. And more expensive.
They're gone, and then they come on the market. Prices go up now because now the demand. We took off 479 homes on Monday in Arizona out of the MLS. Gone. Most I've ever seen in Monday in the last year and a half.
That's crazy.
Yeah,
that's crazy.
So because people are like, you saw it, rates up. This is critically important when you look at these guys. How do people follow you guys so they can stay in touch? Because no disrespect, I know a lot of lenders, very few of them look at the data the way you do, analyze it the way you do. How do they find you, Greg?
Honestly, I just post a lot of stuff on Instagram. I post a ton of videos, ton of reels. You can DM me there. I personally reply to all my DMs, and that's where you can get a lot of information about the market. It's literally Greg_Gale_.
Easy. What about you? He's just kidding. He does it all himself.
We'll put it in
really.
the comments.
I have no idea what it is.
And listen,
I do put stuff on there, but I don't know how to.
Those of you that love this guy so much and you want to buy the clothing, Dustin Dehart, Greg Gale.